Okay, this is the last video for chapter 4. We will discuss classified balance sheet in this video. Then, what is a classified balance sheet? Classified balance sheet asks you to prepare balance sheet based on classified items. What are classified items? You distinguish within assets and liabilities current portions from non-current portions. Then, what are current versus non-current? Current meaning you can cash an item in 1 year. Okay, they are current assets or current liabilities. Those that takes more than 1 year to cash, they are called non-current or long-term assets and long-term liabilities. Okay, again, you need to classify assets into different groups. The first is current assets. Okay. Under the current assets, you have things such as cash, accounts receivable, supplies, prepaid insurance. They are all that you can cash in 1 year. They are current examples of current assets. The second group is long-term investments, which you study in chapter 13, maybe 16. Yeah, I think it's chapter 16. The next group is so-called PP&E, tangible long-term assets, properties, land, and equipment. The next group is intangible assets. A topic that we study in chapter 10. Okay, intangible assets include the rights that are protected by legal provisions such as license, patent, brand names, franchise, and the like. Okay. Yeah, you classify asset items into these categories, and you may have others. When it comes to liabilities, you classify liabilities into current liabilities and long-term liabilities. Okay. If you are obliged to pay back within a year, then they are current assets. Typical examples include accounts payable, unearned revenue, salaries and wages payable, interest payable. Long-term liabilities, there can be current portion of notes payable, but larger chunk of notes payable are usually classified as long-term liabilities. Okay, let's practice using this example. Again, you need to group them as current assets. Let's distinguish current assets from assets by making a small indent and making even further indents. Okay, and then you make a subtotal for them. So that you make it clear that, yes, this is the total current assets. Okay, And then we don't have any long-term investments, but we have, let's create a category, a class, if I can say so, of PP&E. And then under the PP&E, we have equipment and accumulated depreciation, ending up having the PP&E total $49.60. And we don't have, in this simple example, we don't have any intangible assets. So you sum the current assets total and PP&E total so that you have assets total. Liability should be also classified into current portion versus long term. Says down. Oh, too much. Current liabilities. Let's distinguish it from the larger group of liabilities. And then make again, small indent so that they are distinguished from current liabilities. Then, how much is your current liabilities total? You sum them up and clearly indicate that this is your current liability total. And then considering that these are all long-term, let's classify them as long-term liabilities. Indeed, we have only one item, so it is not not complicated at all. And let's add one more line item for liabilities total. It is sum of the current liabilities and long-term liabilities, which is $53.50. So your equity plus liability total should be something's off. What's off? So we summed up the two figures, and equity 12,360. So your liability as an equity total is liabilities total plus equity total. So 710. Did we update something, or why am I having the number different from the previous case? I guess I made a mistake while erasing and deleting and adding some of the lines, maybe. Do you have any idea? I updated all of the tables. So yeah, I don't think it is helping me. What is the problem here? It appears to me that this is the right figure, but somehow, is unearned revenue the same as a notes payable? This sounds awkward, right? Notes payable was 5,000. Yeah, somehow I made a mistake of keying in 800 instead of 5,000. So now, yes, assets and liabilities are the same. So we've prepared a classified balance sheet as an example. Then all companies report classified balance sheet? Or are there some companies that are reporting the not so much classified, right, balance sheet? Yes, some companies use report not using the classified balance sheet, but most of the companies are reporting using the classified balance sheet. Shall we have a look at an example? Which company do you want to have a look at it? I am using the SEC website. Apple, AAPL is its ticker. And here you can find their annual or quarterly reports, which contains the financial statements. Let's click directly the filings. This one. And you can see here by clicking the interactive data, you can find it's the company's financial statements. Again, we are interested in having a looking at the real world example of classified balance sheet. Here it is, consolidated balance sheets. You can see that Apple also reports based on the classified balance sheet format. Current assets, non-current assets, right? Current liabilities and non-current liabilities. We can see that on the current assets, they report cash and cash equivalents, marketable securities that they intend to sell out in 1 year. Accounts receivable, we saw that, right? Inventory, the goods that are ready to be sold, like Apple iPhones and iPads in Apple stores. Some other types of receivables and other current assets. Their total current assets is 154 billion. When their liabilities, accounts payable, to say simply, the amount that you owe to your suppliers or the utility providers or the like. Other current liabilities, deferred revenue or unearned revenue that we saw. Commercial paper, companies sometimes print their securities and give it out with some interest, with some discounted, at a discounted level to the suppliers as a promise that I will give you the money soon. Okay. That's called CP, commercial paper. And some other, including some other term debt, like the current portion of long-term debt. The total current liabilities are 132. Again, these are those that you can cash in 1 year, 154. 132 is your liability that you will be asked to pay cash in 1 year. What do you think, Apple's financial status? You can cash 154 in 1 year, and in an extreme case, you can give them these debt holders this 132 from by selling, for example. It's an extreme case, but anyway, by selling current assets, right? So financially, we can say that as current assets is much higher than current liabilities, Apple looks okay. Right? Then what do they have as long-term liabilities? Marketable securities. We saw here marketable securities as current assets, but they are marketable securities. They tend to, Apple intends to sell them based on the market's fluctuation anytime, right? But still, they may hold it for more than 1 year. So they classified it as non-current assets, PP&E, and other non-current assets. Okay, classified by as other. so that their total non-current assets is 199, which is a sort of similar or slightly higher than total current assets. Adding the two, you have current assets 354. Apple, like other companies, they have long-term debt. I remember that long time ago, a news that they issued a bond. So they have long-term debt and other liabilities, and adding them up, they have total long-term liabilities of 155, which is slightly higher than total current assets. And adding the two, they have total liabilities of 287. Cool. You should have a look at the company of your choice, the company that you are interested in, and please have a look at their classified balance sheet, just for fun, right? Okay, that's the end of the chapter 4. See you in the next video. Bye.